Thank you very much, Fred, for having me here this evening, and Katlego. It's an awesome story. And we've spent a lot of time building our business through helping SMEs. And so we're going to pick up a couple of things that you've talked about, which are very important for us at JUMO. First of all, thank you for taking time out on Valentine's evening. I'll be very quick. I have to say to my lovely wife, Victoria, thank you for letting me do this on Valentine's evening. She's expecting our 4th child in 4 weeks' time, so it's very cool of her to come out. So I think the starting point for us is that inequality is fundamentally unacceptable. That is particularly the case today because over the last 5 years, technologies have emerged which can solve problems related to inequality in financial services. So I think Katlego talked about diversity, which is something which needs to be celebrated. And in diversity, there's a richness which does not exist without being able to embrace the differences between people. And for us, our mission is to take inequality and deal with it head on. And the way that we do that is by reaching people with tools for money. So our business started a couple of years ago as it is today. JUMO was at the beginning of 2015, 10 people. It's 250 people today. We're mainly engineers, data scientists, channel people, a lot of digital experts, people who design systems and software that we can use with partners to reach people. So let's talk a little bit about what that means so that it's not abstract, because we don't do business in South Africa. So today, our customers, let's take one of our markets, for example, in Tanzania, can, on their phones, go to a menu where they can access working capital for their business. So Yoko provides them with the opportunity to take payments from people with cards and perhaps maybe other types of payments in future. And what we do is on their phone, we give them access to products like saving and borrowing so that they can grow their businesses. And the reason why that's important is because these are people who have no access. So we do not do business in South Africa today. Our business is entirely outside of South Africa in markets in which access is the most chronic problem. So we are live in Tanzania, Kenya, Uganda, Rwanda, Zambia, Ghana. We are going now into Pakistan and Myanmar. And we're very proud of the fact that our technology is now being taken, built in Africa, for Africa, into Asia, as being a great model of something which can make a big difference. So the reason why we're doing this is because we believe people have to have access to tools to manage money. Everyone needs to use money in some format. And our target is to get to 1 billion people over the next 5 years. We have just over 100 million people under integrated coverage today, 5 million active customers. We'll be close to 250 million people under integrated coverage by the end of this year. I can come back to the business a little bit later on, but I thought I would aim the discussion around what I think are the most important factors that are going to see Fintech make a breakthrough, because in general, I think Fintech up until now has been pretty disappointing. We haven't yet seen very large-scale financial technology which has redefined the financial landscape. It's coming, and we can talk about the factors that mean that it's going to come very quickly, but so far, financial technology has not yet fulfilled its potential. It is in very, very early stages. If I could start off, first of all, I'd just like to get a little bit of a read from the audience. If you could just tell me, when the average man in the street interacts with a bank today, or lady, could you just tell me they're thinking about approaching a bank. Perhaps they need working capital for their business. They're an SME, so someone that Katlego described. Could you please just tell me emotions that you think they feel when they think about approaching the bank? Perhaps you could just shout out some emotions. So we've got stress. Wow, that's very thin. I'll try and write more clearly. I apologize for my... this is a permanent marker. Pilot permanent marker.
We'll fix it.
Okay, I owe you a whiteboard. Okay, so, right.
It's done now.
It's done. Better make this nice. Okay, stress. What else? I heard anxiety. So tension I heard. Okay, anxiety. I can't spell. Okay, frustration. Okay, cool. We get the picture, right? So can I just sum that up by kind of doing that, right? Not very happy, lady. Okay. So, whoops. Okay, so Russell, if I could have my first slide. Okay. So I preempted your feelings. I didn't condition you by putting my slide up first. I let you give me your read on the emotions. And so we've got this little lady down here, and there's this massive financial, let's call it a bank. It is bank, right? This massive bank here, and the bank, if you're that lady, you look at the bank and you think, whoa, that is a big building. It must be very expensive. The people inside probably aren't very friendly. I'm going to have to meet all of their requirements if I go inside. Because it's such an expensive building, it's going to be expensive to interact with. It's quite intimidating. And there's a good reason for that. The biggest reason is this bank today makes a very, very large amount of profit that it's trying to protect. So if we just try and frame, in my mind, that the primary emotional driver of what's going on here in this equation is, in my mind, is mistrust. So we could discuss that further and come up with some other things, but let's just leave it there and move on. Now, before we look at the next slide, I think I'm just going to ask, now, actually try just to put yourself in the bank's position. Think about the way that they see the world looking out from this tower at the little lady there who's genuinely not trying to do anything wrong. She just loves some help, and she's responsible. Maybe she wants to build her business. She's a hairdresser. Lunchtime, there's a big queue. She needs another seat so that she can address the business opportunity that she has. So let's flip it around and look at the bank's perception of the world. Do you want? Is it easier if you go? Is that going to the laptop? Is it easier if you go to the back, Russell? Yeah. So actually, the way that the bank feels is very different to what you'd expect in reality. They actually are in the corner in a tiny little portion of the market, and they're shackled, and primarily they're scared. And the reason why they're scared is because they have no idea how to give the customer what the customer wants. We agreed she'd say that earlier on. That's something I'm going to have to call you on, because that's absolutely the case, that they don't know how to address the customer. So, look, there are some banks that do great work in certain respects, but in general, I think if you today in the fast-moving world of information platforms and automation, they are primarily fearful because they cannot address the market. Let's put that into numbers in our markets. So we started our business in Tanzania, and within 2 years, we are doing 70% of the financial services volume in the country in credit numbers, right? So 70% of any credit, total flows of credit transactions run through our rails within 2 years. Right? That is just a sign of the fact that they're fearful, and they're good reasons perhaps for why that is the case. If they don't know how to work out risk, or they don't know how to employ systems which can help them to reach people at low cost, so it's not sustainable. But they have a real challenge. So I just ask if we can think about that perspective and be sympathetic for a moment. There are serious challenges that they face. They're also under attack from the regulator. So they're taking it in the neck from everywhere. Everyone's trying to disrupt them. And the man or woman in the street doesn't particularly like them. So it's a very defensive place to be. You're trying to hang on to things which you know are not going to survive in the form in which they are now, and you are losing ground every day. Just to fill you in on how bad that is right now, there is an EU directive called PSD2, which is coming into effect in 2018 in Europe, where banks will be forced to give their customers the opportunity to hand all of their account history over to third-party product providers at the moment at which they get offered a product by a third party. So they will have to give their competitive edge away to anyone who wants to try and provide a better product to their customer. That's a very scary place to be. Russell, can we move on? So if we talk about information platforms in a sort of a fundamentally different equation, we could have made that a very long list. You probably have differing feelings about some of the companies that are listed here. You know, Airbnb, obviously, we know about accommodation, Kickstarter for crowdfunding, Facebook so that you can connect and express yourself for free, Google so that you can find things, Wikipedia, validation of information, so making sure that information is available and that it's accurate. Now, what these businesses have in common, which is so relevant to the banks, is that they have used their technological capability to create an efficiency which they've given back to the customer so that it's a better product. And they've started there. So the way in which they have approached the product that they've put in the market is they've said, if we can use information to solve a fundamental problem, and our product is way better than what someone else can provide today, then the customers will love the product and they'll use it. So we know what has happened with those businesses. They've had viral adoption and they're huge businesses today. And your interaction with those brands there, you probably feel differently about each of them. But in general, or maybe in certain cases, you'll feel that there is an authenticity in the way that they have designed their product. It is trying to solve something in a genuine way for you. You don't tend to have that experience with banks today. So let's turn our attention to ways in which you could transfer this type of breakthrough to financial services, which I would suggest has not happened yet, but it's about to happen. Russell, if you go forward. So this is behavioral data. This is a network visualization using Spark on AWS. The visualization is created with D3.js. It shows you essentially influences and how people are behaving within communities. This is only made possible by cloud computing. So if we did not have AWS and other cloud providers giving us scalability of being able to manage vast amounts of data at very low cost, this wouldn't be possible. So in the first instance, we have a proliferation of digital footprints around the world. So in our markets, for example, outside of South Africa in the emerging markets, everyone is now digital because of mobile phones. So everyone has a digital footprint. But that's not enough. you then need to be able to manage all the data associated with that. And just to give you a frame of reference, this is for one ecosystem for one country of ours. In 1 month, it's over 1 billion events that we need to model in order to create these type of outputs. So you need to have very scalable resources in order to be able to manage that type of data. And also, over the last 5 years, what happened as cloud computing became more available, capacity at lower prices, people developed tools like Spark and all sorts of other tools which give you the ability to then manage, and those tools have matured so that they now give you these wonderful insights. So that's a fundamental building block. This has only happened within the last 5 years. And the rate at which these type of insights are being adopted is staggering. So just so that you know, AWS here in Cape Town, they have a dev site. They had an increase in sales in relation to cloud computing 40% year on year in 2016. A 40% uplift. So first of all, you have to understand people's behavior. Russell, if we can move on. Next, you need to be able to understand the way in which we are connected and where the constraints are. So this is another type of visualization which shows you from a geographical perspective. It's very hard to see because of the light. This is a geo visualization of people interacting with each other and transacting. You can then see where there are specific blockages and contextual challenges. So, no problem. So, for example, you'll find that in this part of the country here, you've got a black spot. There's no liquidity. It may actually be in relation to agent coverage. It may be in relation to transaction facilities. Maybe it's low population density. But you have to be able to understand these things so that you can solve for what the customer needs. Now, how do you make this real? Okay. Where this is going is, for example, from a geo point of view, if you, in a few years' time, walk onto, in South Africa, a car dealership floor, and you're a farmer, there should be enough knowledge about who you are and the way in which you live that when you stand next to the Toyota Hilux on the dealership floor, the sensors should be able to tell what you're looking at and push you an offer from the best provider, whoever it is, Stanbic, FNB, your bank maybe it'd be someone who'd like to be your bank, saying, we'd love to fund this for you. If you accept this, this offer that's presented to you, you can walk off the floor with it. Now, at this level, the extent to which you can solve problems for people is staggering. So what we have observed is market traders that get up at 3 o'clock in the morning, and they always have big cash outflows first thing in the morning. And then their cash comes in gradually during the day. They have different type of cash flow cycles. And in the same way that Yoko helps them to take payments, we can solve cash flow problems that they have where they'd like to buy, for example, more tomatoes to be able to go and trade at the market. But you have to be able to see where the blockages are, what the context is, and what the opportunity is to help people so that they can improve their own lives. If we could go on, Russell. So you understand the behavior, you've looked at the context, now you need to be able to be accurate. This is something that we call shizness. It's just an example of the predictive capability that is available in the market today with the right type of tools and the right type of people. This is actually a combination of algorithms. These individual dots are buckets of data, of individual people within an ecosystem that are being defined according to certain behaviors. The rate at which it's moving is transaction velocity, and on the z-axis, which is the vertical axis, there is an algorithm that predicts with 90% accuracy a certain event happening in terms of your behavior between 7 and 37 days from now. So we've got it to 90%. We've still got a lot of work to do, But the rate at which this is moving, again, as a result of being able to train models on massive amounts of data, it is moving very, very quickly. So if you have prediction accuracy, then people who are financial services providers can have confidence and know that they're taking controlled risks. So my partners, for example, the people who want to reach customers with savings or with credit are all of the banks. Could be Stanbic, could be Barclays, and they want to use my technology to be able to get to people to provide them these solutions, but they need to know that it's accurate. So we've covered the behavioral side, we've covered the context and understanding situationally where the dependencies are. We've talked about prediction and the accuracy and control and confidence that gives people who are going to use those tools. So where does that leave us? Russell? Where it leads us is a place where I think all of finance is going to move quite quickly, which is that the customer has to own their own financial identity. So the value of all of their behavior needs to be given to them in a way that they own it and they can control it, and they will decide how to use it to get the best solutions for themselves to suit their life. And the banks must compete in order to give them the best product or solution. But the way in which they compete will be determined by how open this is, how much confidence they have in the system, how much data is available, the accuracy, the extent to which it's behaviorally integrated. But this type of evolution, which is being forced in Europe by PSD2, is going to happen extremely quickly. And it will be the technology providers who provide that open set of tools to allow the biggest providers of financial services to reach people with great solutions, great products, are going to make a profound difference to the way in which the market is shaped in the future. So from my perspective, we're at a very special point where all of these things that have been happening as a result of digitization, cloud computing, tools in relation to big data, the ability to predict, they're sort of visible, but not really. They're mostly invisible at the moment, and they're becoming visible very quickly, and we will be surprised by the rate at which things change from here. And as a result, I think you'll see some very, very big technology businesses that are built on the back of that are not trying to provide their own solution to replace banks, but are trying to work with the big financial services providers who have balance sheets, who have the most vested interest in giving the customer a good solution, and who can do it at a better price than anyone else. So very exciting time. Yoco is a company that's very aligned to us in terms of creating access. Hint, hint, we should be working together. And it's a no-brainer that for us to, I'm actually making my pitch to him on stage. It's a no-brainer for us to actually give the world of financial sort of choices through your device, where we bring the banks to provide the most competitive offer to the customer. But it's a very exciting time. I hope that was helpful. Thank you.